In Canada, it takes the average person between 25 and 30 years to pay off their mortgage. However, in a time of soaring interest rates and high cost living, some homeowners are extending that period even further into what's called an extended amortization period. This allows some people to take 50 years to pay off their home. Joining us this morning with more is mortgage broker Mary Cialcis. Welcome back to Your Morning.
Thank you.
All right, for people who don't know, what is an amortization period?
As you said earlier, an amortization is the total length of time that it takes you to pay off your mortgage in full.
So you came across an 87-year amortization?
I did.
Can a person in Canada actually buy a mortgage or buy a home with that kind of amortization?
No, you can't. And that's kind of where the misconception comes in. In Canada, you can get a 25-year amortization or a 30-year amortization if you're putting more than 20% down. In some rare occasions, you can go to 35, but the majority is 25 and 30. Any of the extended amortizations are as a result of people being in fixed payment variable rate mortgages. So your payment stays the same, and even though the interest rate keeps changing, the amount that's going towards interest and towards principal keeps shifting.
Right.
And that's how you end up with an extended amortization.
So how are high interest rates to blame for this then?
Because as the variable interest rate has gone up, the portion of a person's fixed payment that is going towards principal and towards interest is changing. And as it's gone up, more and more of that payment is going towards interest to the point where it's not even covering the interest payment, which is then what's pushing out the amortizations.
Yeah, I mean, we saw a lot of this to negative consequences in the U.S., these crazy decades-long, multiple decades-long amortizations.
Yeah.
What do these mean for borrowers, these long amortizations?
So it means that they're going to pay off the home altogether. It just extends it to a really ridiculous amount of time. What they should do, if they're in a fixed payment variable rate, is the borrowers really should make a concentrated effort to pay more. Don't stay at the lower fixed payment. Exercise the option of paying more so you can reduce your amortization. Over time, as interest rates start to come down, the amortization will come down as well. But during the time that it's this high, they're adding more interest to their balance.
Yeah. How are people even accessing these ones that are past 30 years in the first place, Mary?
They're not accessing them. That's the thing. You can't go into a bank and say, hey, can I have a 75-year amortization? It's strictly as a result of the type of mortgage product they've selected.
Right.
And certain members of the big 5 banks offered fixed payment variable rate mortgages. So for example, if you have a $1,500 payment, in the beginning, $1,000 is going towards the principal, $500 is going towards interest. As the interest rates have gone up, that's shifted. And in some cases, that full $1,500 is now going towards interest. And in some cases, it's not even covering the interest. Oof. So if your interest is $1,600 on a monthly basis, that extra $100 is now getting added to your mortgage balance. Ugh. So then the next month, you're paying interest on the interest.
You're just throwing money away at that
point.
Oof.
This is why they need to make a concentrated effort to add more to their payments.
Right. What happens when it's time to renew one of these extended mortgages or the mortgage the way that you described it? Will people, people won't be able to afford their houses. Like we said, they're kind of just throwing money away.
In a sense. So for anyone in that situation, I recommend they consider refinancing at any time now or up until their renewal. And even at renewal, they can look at refinancing. It just depends on what the rates are, but it's really something they need to be cautious of because I don't think they're going to be able to renew into an 87-year amortization. Right. If they have to bring it back down in line and the rates are still high, the payment could become quite high.
Now more than ever, every penny counts. Mary, thank you so much.
No problem. Thanks for having me.
Hey, thanks for watching. If you liked this, be sure to subscribe here, or you can check out more Your Morning videos right here.